All right, guys. I've got Michael here from Airswap and Fluidity. I'm super excited about this. We've got a bunch to dig through. So thank you very much for coming.
Thank you, Pomp. Thank you for having me.
Absolutely. All right. So let's start with your background. I think everyone knows the crypto side, but you actually have been in finance and trading and all that stuff for quite a while.
Yeah, so math, Carnegie Mellon undergrad, and then I joined this small trading company called Virtu Financial. Grew like crazy, wrote it out through their Asia expansion, and I made partner like when I was 25, which is probably the coolest thing that's ever happened to me. I went through a merger, in my early 20s. I had the ability to like go to another country and build out a part of their business that, so it's kind of like doing a startup, but within a company, applying a business model to new markets. And in Asia, one of the things I got to do is not only interact with the markets and technical and trading level, but also in a regulatory level. So I became like very familiar with international law, Japanese law, Australian, Singapore, Hong Kong, China. And just having like that kind of experience at a really young age, I think set me up really well for what we're doing now. That company IPO'd in 2015. I took some time off. I learned about Ethereum in early 2016. In my previous career, it was like the humans losing on Wall Street to computers.
Yep.
Right? It's just computers coming in and just like dominating. And when I read about Ethereum, I was just like, this is pretty much going to happen, but to all other sectors of the financial services stack. So I just wanted to be a part of it. And then, started to look at exchanges, started to really study decentralized trading, blockchain, how everything kind of fits together. And we released the swap protocol white paper with my co-founder, Don, who's incredibly talented at synthesizing ideas and building product. And we released that white paper, went viral, and then we were on the map.
That's awesome. What do you think the biggest things you learned at Virtu are?
I would say the best thing I learned there is not anything specific, but more just culture and how to actually behave. And what I mean by that is like, we didn't have the answers. We never did, and when you're at the front lines of the financial markets and it's hyper competitive, it's a moving target. You're always trying to like come up with your alpha and figure out your trades. You just have to figure it out. There's no one that's going to kind of handhold you through something like that. And so just kind of owning, being able to actually jump into a problem and figure it out. And, not only from a mathematical perspective, but also from an intuitive perspective, just having that kind of ownership, I think at a young age was really incredible. And also that company's culture is very strong as far as not prioritizing like ego or anything like that, or politics, or no politics within that company. It was very flat. We had really good access to, the leaders in the company. I eventually was a leader in the company and, still was around all the young guys all the time. So I think that kind of flat, non-hierarchical organization, which you would probably find at like a bank. If I spent my 20s in a bank, I don't think I would be the same person at all.
Yeah, it's super fascinating too how nobody sat down and like, hey, here's rule number 1, 2, 3, 4, 5 of how to act or whatever. They just immerse you in a culture, right, in kind of an organizational structure, and you just naturally pick that stuff up through experience rather than kind of intentional learning.
Totally. I think that's how the strongest companies in the world operate. I think that's going to be the future. It's like, even Ray Dalio, he kind of just transcribes his principles and gives you a framework in which you operate, and that provides a framework in order to answer some difficult, some easy questions, because the thesis is that in life you're going to be presented with the same questions over and over. And so just having like a very positive framework around very intelligent and down-to-earth people, I think really allowed that company to basically go from nothing to the biggest trading company in the world in 8 years, which is crazy on Wall Street if you think about it.
Yeah, it is pretty wild. What are 1 or 2 things that you guys tried that didn't work, and you kind of took away a lesson from?
Yeah, so I personally at that company made a big push for the company to look more at options trading. So the company wasn't like a powerhouse in options trading. This is one of the things that I kind of studied in college, and I knew the basics about it, and I had a thesis about how we should actually be trading them, applying our system. And my thesis had to do with, we already have the technology, we already have the ability to interact with financial markets in microsecond level. That's the hard part. All we need to figure out is the pricing, right? We need to figure out how to actually price these options and figure out where how to price the vol curve and when things move, what we're supposed to do. And so I came in with that thesis and I pushed it really hard. And I think that we just didn't want to devote the resources to something like that. And I got a little bit of pushback on that kind of plan. And I think that was actually probably the beginning of the end of my career at Virtu, is that little, thing that I push for. And I'm a very self-directed person. I kind of want to decide my own fate. And I thought we can do it. And it wasn't given the resources. And I think I decided maybe at that point I was going to leave.
Absolutely. And so, you figure out about Ethereum, start looking at it, it's interesting to you. How do you go from, this Ethereum thing's interesting, to I want to build Airswap?
Yeah, that was like a year and a half, or maybe a year apart. So that's a good question. I think that first learning about Ethereum, I learned about it by accident at a music festival by meeting Joe Lubin and a bunch of the Consensus people. It was in April of 2016. And at the time I was doing something else and I had to kind of wind it down, but I was living in Los Angeles, and I actually made friends with Brock Pierce, who lived in Venice at the time. Brock actually was one of the early people that kind of introduced me to crypto. His fall from, he had a little bit of a fall from grace, but I still, am loyal to him. He introduced me to some of the things, and then I kind of wound down my previous project and started to look at the space a little more aggressively from LA, but I couldn't do it from LA because there wasn't kind of the Ethereum community there. So I reconnected with Consensus, started to hang out with them in New York, and I think a lot of the problem with breaking into the space was that a lot of the people in blockchain that were kind of doing their own projects in 2016 had been around for like 2 or 3 years, and they had a name, they had Twitter following. I didn't have any of that, so I was like, I probably need to just align with the right people. And I saw Consensus as a good opportunity to do that. When we actually started to do the project, when we wrote the white paper, we were never a Consensus project. We weren't a Consensus project until after we released the white paper. And after, maybe even, 2 months before we did the token sale, we came in with our own capital. Don and I had our own, previous successful careers. So we came in with our own capital. We ended up doing it as a JV, not as, their classic spoke structure or whatever you want to call it. And so we were able to just operate outside of Consensus, which I think for us made it a lot better because we didn't really have, 100 different people telling us what they thought about a project every day.
Mm-hmm. And so what was the original idea? Was it how we know Airswap today? Was it something else and it's kind of evolved over time? What goes into the idea as you guys are writing that original white paper?
Yeah, so I think it evolved a ton, to answer your question, in a short way, but in a long way. Basically, we're reading the message boards and trying to understand what do people want in this space. So was kind of the first way I was looking at it in 2016. And everyone talked about decentralized exchange, and this is kind of like a hot thing everyone was talking about. And there were a few implementations at the time, and I was looking at them, and they were kind of mostly using order book models. And I had a lot of experience with order books, traded on pretty much every exchange in the world, and I just kind of decided, hey, we have this distributed system, with distributed nodes that are processing the transactions. Order books are inherently centralized. They exist on one central server. If you try to distribute that, you're going to run into all sorts of problems. And so we designed a model that became the swap protocol, and that is the correct design for decentralized trading. I think it will win in the long term, and it basically gets rid of the order book entirely, decentralized. So the way I think of trade is you have 5 different components of trade. You have peer discovery, price discovery, execution, clearing, and custody.
Okay.
You basically go through those 5. Yep. Every time you want to do a trade, you go through that loop. We managed to decentralize 4 out of the 5. So we decentralize everything except for peer discovery. Peer discovery, you find everyone in one central place, and then everything else is done decentralized, as past peer-to-peer. This doesn't end up being subject to front running. It doesn't end up having race conditions. You don't have to charge market makers for placing orders and cancels, which are all sorts of different things that other designs are running into, and I think will make it difficult for them to scale when they start to get automated traders on their platform. And when things start to really pick up, it's going to be difficult for them to scale. We won't have that problem. We'll be able to always scale because we kind of like designed it correctly from the beginning.
Got it.
Yeah.
And so, as you're thinking through that, why do you think, or why did you guys choose to not decentralize the peer discovery? Is it because you can't, or is there some sort of regulatory reason, or what was the thought process there? Because you got 4 out of the 5, but what was that last one?
I think it is possible to decentralize the first one, and I actually don't think it would be super difficult to do so, and we might put it on a roadmap at some point. But I think we were just using the design where you want to put in Ethereum, you're subject to scalability issues where you basically can't just like throw everything on chain. You want to only put the most important things on chain. It's similar to Bitcoin, where you have kind of off-chain mechanisms in order to communicate the state to the chain. So we basically designed something where the part that was off-chain was the peer discovery, and then in other designs you basically have an off-chain order book, which is centralized. Because that's public, it ends up being subject to all sorts of issues later on. So we were just kind of trying to think of what is the best way to do an off-chain on-chain mechanism that doesn't have these limitations, and that's kind of what we came up with.
Got it. And so today the Airswap product is what? How are people using it?
Yeah, so we released the first version of the platform network protocol in April of 2017. That is basically designed for kind of more automated traders to communicate to manual makers. So it's kind of just like a quick checkout. And the way we wanted to do that with the quick checkout is to basically integrate it into dApps, basically have a widget that basically goes into dApps. We went into about 20 different dApps. What we discovered is that, maybe the hard way, that people aren't really using dApps. The tokens are mainly for speculative purposes at this point. And so we kind of had to go back to the drawing board, and we're like, okay, well, we need to think about how to design the system, but we also need to compete with something like Binance or Coinbase, right? Which is difficult because we can't do USD, we can't do Bitcoin. We have longer transaction times. The UX is just different. You have to have a wallet, knowledge of a wallet. You can't just come in with your bank account and just like buy tokens. So we were limited by all these things, and we kind of decided to take a step back and said, how do we actually go after the problem again? And kind of the full version of the system is basically to allow a more communication style interface, and it's community generated groups called spaces. We're rolling that out. We just opened this up 2 days ago. We're rolling it out over the next few weeks, and then eventually we're going to have community generated spaces. This is kind of something that's at the intersection of something like Discord and the trading project.
Okay. And so if I'm a user, I can come in, I can get funds into the system, right? And then I'm able to trade on this decentralized exchange, and then I can also chat or communicate with known or unknown individuals, or how does that chat part work?
Yeah, so you actually don't deposit funds into the system ever, so there's no custody or anything like that. You basically just come in with your wallet and you're signing transactions, and the executions are occurring peer-to-peer. So that's kind of one of the strengths of a decentralized exchange, decentralized trading network, whatever we're calling it these days. So the thesis there in the chat interface is that there are all these other types of trades that you might want to do. You might not just want to be communicating with a robot and receiving trades, but you might actually want to get a better price. You might want to negotiate. This is kind of how a lot of different buckets of trading fall into this. Something like the OTC markets will fall under this, and a lot of people don't know this in crypto because they're used to trading on order books, they're used to trading on Binance, but most of what we trade in the world happens peer-to-peer OTC.
Yep.
Both on Wall Street and off Wall Street. Every kind of transaction we do every day is peer-to-peer. And so we're designing for that kind of experience, but putting an interface on top that we think is going to generate social features, accounts, and we also have KYC features as well. So you could, let's say, for example, as Morgan Creek, if you wanted to come onto the system, you're not going to trade against random people. You're going to want to know, you're going to want to KYC your clients, obviously, for regulatory reasons, and that part has been integrated into the platform.
Got it. And so you guys also recently released or started talking about Fluidity as well, right? And so you've got Airswap, you've got Airswap Spaces, and then it looks like you guys are now also going into the security token space. So how are those related, and kind of talk more about Fluidity and what the focus is there?
Yeah, so we touched on this a little bit earlier, but Fluidity is basically our parent company. We raised our own funds and came into the joint venture of Consensus, of Airswap with Consensus. So Fluidity is actually our parent company, and we revealed it only about a year after we had formed it. So we formed it in 2017. We revealed it at the Fluidity Summit earlier this year, which we were talking about earlier, is where our friend Nuriel was debating with Joe Lubin. So we revealed that the name of the company and also our commitment to bringing real world assets onto the blockchain. That is obviously a very hard problem, and isn't something that you can just, first of all, you have to find an asset. Then you have to, our other thesis is that you need the right framework in order to do this. You need the right standards that the industry is going to subscribe to, or else, if you just list your house on like a bulletin board, right? No one's going to, and no one knows where it is or what, or has any transparency on it. You're not going to receive any liquidity. So we needed to figure out the right asset. We needed to figure out the right framework. And then we needed to kind of come out with it, and we actually did that last week, and that was probably the most likes I've ever gotten on anything I've ever published in my life.
Well, because what you guys announced was a $30 million piece of real estate in Manhattan, right? That is getting tokenized. Why start with real estate? Why that piece of property? Just walk us through that thought process.
Yeah, so we did like 3 or 4 months of biz dev. I think we had talked to you guys about a few different things, over the months, and trying to figure out what we wanted to do. And really it was about, I think, finding the right partners. We met this group, Propeller. Todd Lippiet has like 20 years of experience on Wall Street in structured products. And so he just understands how to look at a deal and see every nook and cranny. And he also knows how to design a deal that's actually good for investors. He has his own broker dealer. He has his own fiat capability. He has his own platform. And we knew how to do the blockchain side of it. We knew how to take the interests that they were going to securitize and represent them as tokens, and then create a secondary market for those tokens on Airswap, which we can touch on in a little bit. So we basically just found this really good partnership, and we were looking through and trying to figure out, they have all these capability, we have all this capability, what should we focus on? And the thesis is that if you look at the broad scheme of what can be tokenized, there can be something that's like a highly liquid public security, or there's all these tail assets that have not had. If you hold one of them, basically in order to get out of it, you have to repaper the transaction, you have to find a lawyer, you have to find a counterparty, and that's also very difficult. So it's just the ability to streamline the secondary market process of the illiquid assets. Our thesis is that will provide a ton of value. Whereas if you're looking at a publicly traded security like Apple or Facebook, they already have great financial markets for it, and they're already doing all their disclosures. There's all this regulatory infrastructure in place. We're not going to be able to compete with that. So,
well, it just works, right? The public markets today actually work for a good amount of people. There's some that are boxed out for different reasons, but what you guys are attacking is the markets where they aren't working well, right? Or they could work better. And so if you start there, the bar to clear or compete with it is not very high.
Yeah, exactly.
Got it. Okay, and so walk us through the actual structure of what you guys are tokenizing, right? So my understanding is that there's a piece of real estate, and there's debt, there's equity, there's multiple components to this. So how did you guys structure it?
Yeah, so it's basically what we published was a framework called the two-token waterfall. And what the two-token waterfall is, it's a way to structure real estate or private security transactions such that the thesis is that if you structure it this way, you will be able to find liquidity. And why is that? It's because token A replicates debt, token B replicates equity. If you take both of these and add them together, you basically have the entire value of the asset. Okay, you're basically replicating the entire financial stack of a real estate asset, and this can probably apply to 90% of the assets in the world. Once you get into the more complicated structures, CDOs, CLOs, that stuff starts to get a little more complicated. But this, a mortgage or a building with 20 investors, you can and a bank that has debt, you can basically replicate the entire financial stack of that transaction. So what does that actually mean? It means that when you have a viewpoint on the price of the asset, you can immediately imply token A price and you can immediately imply token B price. So what we're doing is we're providing A plus B equals the entire value of the asset. And once we do that, you're giving transparency on the entire value of the asset, and you're providing no arbitrage pricing, which will encourage traders to come, which will encourage liquidity.
Got it. And so do you think that the two token waterfall works for real estate, but not equity or commodities or currencies? Or do you think that this two token waterfall can pretty much work for any asset that has both equity and debt in the capital stack?
Yeah, I think it works for anything. It's actually not specific to real estate. We reference real estate in the white paper. It's for alternative investments.
Mm-hmm.
So that can be something like private equity or real estate or anything else. So the idea is for the framework to be broad. It's actually part of a wider securitization framework that we are working on and that we haven't released yet. So there is kind of our goal here is to basically release a framework, get a landmark deal, put the deal, and actually I can't, these are not tied together. The white paper is not tied to the deal, although it's a framework, for regulatory reasons. We can't have them tied together exactly, but we're essentially have this deal. We're putting it through something that is similar to this framework, and then we're basically proving the thesis that there's going to be an active secondary market, and then we can kind of expand out and cover the majority of assets in the world.
Got it. And so let's talk about that secondary market, right? Because I think that one of the knocks against security tokens today is, sure, the technology exists. We can go ahead and we can tokenize things, but where's the liquidity, right? So kind of, what's your rebuttal to that, and where do you think we are, and kind of where are we going when it comes to that secondary trading or liquidity?
Yeah, I think particularly Airswap or non-custodial trading platforms are going to be really well suited to go after this, to go after the secondary market.
Why?
Because in order to take custody of an asset, if you think about it, you have to basically have trust, right? You have to have someone else that's basically taking over the asset for you, and that's a highly regulated event on Wall Street. Custody is if you were going to start taking custody of assets, you have to have every single asset approved. As you start to go into the long tail, like we were talking about before, all the thousands of assets, tens of thousands, hundreds of thousands, it starts to get really large regulatory burden on all of the on every single asset you want to list on your secondary market. And so a peer-to-peer non-custodial platform will allow this technology to scale. Also, going back to the idea of having more OTC style market, all these assets are kind of illiquid, and so you're going to want a way to actually communicate with someone. You don't need to post it on an order book and expect it to trade like a publicly traded high frequency traded security. It's just not going to happen that way. Really, what you want is an interface more similar to something like eBay or Craigslist, where you're basically able to have price discovery found in a different way from an order book. And so I think that Airswap is going to be very uniquely positioned to go after this market.
Yeah, it's super interesting too when you think of a global investor base, right? Where there's a lot of hurdles to jump over for, let's say, an international investor who wants to invest in U.S.-based assets on a U.S.-based exchange, right? And so I think that there's an element of there's problems that we know, and there's technology available today to solve those problems. But this space specifically around decentralized exchanges and the intersection with security tokens feels like an area where in the future we will create products, services, or solve problems that we don't even understand today, right?
Totally agree. And I think that's one of the power of spaces that we're allowing people to provide is we're allowing them to define their own trading environments. So they can have their own KYC standards. They can have their own onboarding process for let's say they only want Japanese traders to be transacting in the security, or they're allowing it to go cross-border between XYZ country. That kind of controlled trading environment we're allowing people to create on Airswap. And the thesis is that in order for something like this to actually trade. An order book basically assumes that everyone is identical and everyone is exactly the same, but it's actually not true in real life, and mostly for regulatory reasons.
Yeah, no, it is. It's very analogous to, no one could have imagined Uber, for example, until there was the advent of the smartphone with GPS and touchscreens, all this kind of stuff. When you look out 10, 20, 30 years, what do you think is possible in this like tokenized securities world or digital securities world?
I can't look out 10, 20, 30 years. That's a long time. I mean, I think that the way I look at this technology is, the internet had an incredible effect on humanity in terms of business, in terms of education, allowing people to just communicate anywhere in the world and decide how to communicate, right? You decide how you want to consume information. Everything that we do with money and value is top down. It's from the government down. We don't have and the banks down. We don't kind of have a choice. But this is allowing for peer-to-peer value transfer. I mean, obviously subject to compliance. I think that kind of society is going to be have that kind of technology is going to have a much broader effect on society because money is so core to our existence, and the ability to kind of participate in capital markets and have freedom to participate in what you decide to participate in. I think that's going to have really profound impacts on society, but I don't think it's going to be like the internet where we have it's going to be visual, right? It's going to be it's just going to change us in a unreal way. Like we're not going to be able to quantify it. I think blockchain is something that eventually the UX is going to be abstracted away from everyone. We're not going to be able to actually realize that everything that we're doing is kind of integrated. It's actually one of the things I love about the Ethereum community is that all of the projects kind of interoperate. They figure out how to get their smart contracts to match together. So you have someone working on derivatives, you have someone working on compliance. All of these different smart contracts can basically interact with each other.
Yeah, and I guess part of this is recreating elements of Wall Street securities markets, et cetera, that we know. And then there's the imaginative part, right? Where can people figure out how to use this technology and apply it and also follow the rules? What do you think today in the securities, like the digital securities market, is the main issues holding this back from going, I don't know, tens of millions, maybe hundreds of millions of market cap to billions and hundreds of billions?
I think we just need standards. We need a framework that basically, first of all, the institutions are going to buy into, and also the general framework, the general investor is going to actually buy into. So I think we just need the right frameworks. We need like kind of the Schelling point of tokenization to happen, and I think that'll probably happen over the next 6 months. To me, if I look at this technology, I think that the next 5 years are going to be finance. I think the 5 years are going to get finance is going to really get affected by this technology. I think the next 5 years after that is going to be accounting, because basically once you have every asset on a blockchain, there's essentially nothing to account for, and so the entire accounting industry kind of turns into a GUI, right, where you're just running a scrape and everything is correct. The next 5 years, and this part probably happens in parallel, but I think the legal industry, the compliance industry, is going to change dramatically. I think automating compliance is going to have tremendous effects on society, because the way that laws are written currently, it's top down. It's the government says this is the way you need to do things, and people need to follow that. But and there is this like kind of level of trust that happens, where the government maybe trusts you or doesn't trust you, depending on who you are, to behave a certain way. But if all of that is enforced into smart contracts, and all of us are engaging in the society where we know that we're all following the rules, I think that allows us to do a lot more things. It allows us to basically transact in all these different ways. And so I think automated compliance is something that people are not talking about enough yet, but I think they will very soon.
Yeah, I mean, look, we've gone as far as to say wouldn't surprise us if the SEC mandated it, right? In terms of it actually makes their job easier. They're going to be proactive rather than reactive. Part of it then becomes who is trusted to write that code, right? Is it a decentralized team? Is it the government themselves or a regulatory body? I think there's a lot of questions in the execution and the nuances there. But I generally believe this technology can solve a lot of the fundamental issues that we see in the existing markets and would be quite powerful.
Yeah, I totally agree. I mean, something like the accredited investor checks, can be enforced at the blockchain level, right? You can have a mechanism that basically looks at, either if it's initially it'll be some central party that basically puts it onto puts your accredited investor check onto the blockchain, but eventually it can just like scrape your earnings or something like that. And I think the accredited investor checks will change a lot over the next 2 years. That's another topic maybe worth going into. But I totally agree. I think eventually this stuff will be mandated. Coding laws into smart contracts will be mandated. I don't know who's going to do that.
Absolutely. What do you think it takes to get more retail-focused investors to switch from investing in public markets and kind of the traditional stocks to tokenized securities, digital securities? Is it just user experience and interfaces, or do you think there's some sort of like inflection point that's event-driven by something in the market?
Well, I think it goes back to kind of what you were saying before, is that we really don't know what this technology is going to look like in 3, 4, 5 years. Like peer-to-peer economy, we don't really know. We couldn't really predict Airbnb, but now Airbnb seems super obvious. So we don't really know what kind of investments people are going to be able to invest in or want to invest in. So it's kind of two sides. We don't know what the supply side is going to be, and we don't know what the demand side is going to be. We have some ideas and some product ideas around that, but that's kind of our maybe our edge right now, just thinking about that a lot. So I don't know if I'm able to say.
Absolutely. Okay. And so what has been the response from kind of the global audience, right? Where do you see the most interest in whether it's the real estate you guys are doing now or just kind of this move into the more kind of security-based assets? Can you tell a difference between U.S. versus other regions of the world? How do you just think about geography?
Yeah, I mean, everyone wants to invest in New York real estate, right? So we've had a tremendous amount of outreach from different people reaching out to us from around the world. One of the things we're kind of exploring right now is a crowdfunding platform, partnering with a crowdfunding platform in Singapore and maybe doing a portion of it there, because in Singapore they can onboard Chinese, they can onboard European. So I think making these global products will allow them to proliferate further. If you think about what's required for an international investor to invest in Manhattan property at this day and age, other than doing it through a REIT or something like that, it's actually pretty hard to actually buy a property. But fractionalizing and allowing anyone subject to compliance to be able to purchase, I think you'll draw a lot of international interest into this market. Absolutely.
And part of me thinks, Wall Street's going to be asleep at the wheel and they're not going to see this stuff coming and there's going to be a whole disruption. And then part of me sees that they've got blockchain teams and, capital markets teams and all stuff, and they appear to be paying attention. Where do you think the kind of disruption occurs, if any, right? Do you think that this is, people sleep at the wheel no matter if they know to pay attention or not, or do you think that they're generally on top of it and there will be kind of coexistence between the legacy system and this new system?
Yeah, so I've thought about this a lot because the way I think about it is whether blockchain is going to be transformative from the top down or from the bottoms up. The top down meaning, the banks, the governments decide, hey, we're going to put everything on a blockchain and everything's going to be great. Or if it's bottoms up, where basically people are building this technology, they're layering on top, they're trying all these new things, and eventually it starts to pierce into there's some inflection point, and eventually that just pierces into what the banks are doing. I don't know what the answer is. I think it's going to be I think it's possible that there is an event that really causes this technology to proliferate, but I think ultimately the banks are getting wagged by the compliance departments, and so they you've seen so many different ways that they've been trying to get into crypto, trying to get into blockchain technology. We have conversations with a few different banks. It's been kind of sometimes kind of frustrating where they're just always just thinking about they just can't take any risk, right? And this is the same reason why Virtu was so successful, is because they were able to move quickly and they're able to take risks and they're able to build these platforms that the banks weren't able to compete with. So I think the bottoms up approach is more promising, but I also think that in order for this technology to really take off, especially on the tokenized securities part, it's going to need institutional adoption.
Absolutely. Well, it just brings a level of legitimacy, right, and kind of sophistication. This makes sense. All right, so let's do some rapid fire questions here. I'm going to change it up just a little bit, given kind of what you're focused on. On the tokenized security side, what do you think the assets that need to get tokenized that you haven't heard of yet? Which ones would be the most intriguing to you? Such a good question that you're speechless.
One of the interesting things that we were talking about yesterday is different levels of the entertainment stack, which I personally am very averse to the entertainment industry because I'm from LA. But I think that there are different elements that have tons of middlemen just involved in taking a piece of the pie, right, where the artist eventually isn't seeing anything. So being able to tokenize and represent that in value and maybe royalties or something like that, I think there's a lot of promising things there. Again, there are so many middlemen in that industry that you would need that to come from the top down. I think you would need the labels to invest in your project in order to get that off the ground.
Absolutely. Maybe enlist Kanye for that one. He seems to be all over the tech and music scene right now.
He's your boy.
We'll see. We'll see. He's going crazy on the internet lately.
What's new?
All right. So other than Airswap and Fluidity, what do you think is the most important company in crypto today?
I think that the most important problem in crypto is scalability, and you're seeing all of these new platforms that are coming out with all these unique ways to solve scalability problem, like Decentralized, and you're going to see Cosmos Tendermint coming out later. I think like the Hard Spoon later this year, having Ethermint having a second version of Ethereum that has a different consensus mechanism. I think these are all going to be super interesting. I think if Ethereum needs to figure out how to scale, because a lot of competition's coming.
Absolutely. Competition might be good, right?
Definitely. I think I think even the price going down and there being all this competition coming to market, I think has caused the community to kind of rally around, hey, we actually have to get this stuff done.
Absolutely. Okay. What's your one most controversial thought in crypto? If you the one thought you have that a high majority of other people would disagree with.
Just don't want to offend too many people with my answers.
Whatever one you just thought of that you don't want to say it. Nobody listens to this anyways.
I think the one thing that I've never kind of understood is how much infighting there is in this community. Like, with what happened with Bitcoin in 2017 or 16, I can't remember now.
17.
People's careers basically are defined by what chain they support, and so it's kind of like these technological upgrades and this self-organizing community. I think people just need to be a little more patient and supportive, but I guess that's not as fun on Twitter.
Yeah, it's definitely not as much fun, and there's so much anonymity or pseudonymity that goes on, right? That real identity is kind of lost. It's actually one of the things, I don't think I've ever really talked about this, Facebook figured out early on, right, was real identity actually increased the quality of the content. And so, in crypto, I don't think that everyone should have to use their real identity. I actually think there's a lot of protections that can be provided by anonymity, pseudonymity, etc. But it is interesting to see, the MySpaces of the world had all sorts of pseudonymity, anonymity. Facebook said, no, you have to use your real identity, higher quality content, and ultimately ended up being the winner. I do wonder what that impact would be on crypto if everyone had to use their real identity.
We have a lot of ideas around that, definitely for kind of the user-generated communities. I think identity is a huge part of blockchain that hasn't been explored.
Mm-hmm.
Totally agree. I think that people have identity solutions, but they don't know how to use them.
Mm-hmm.
And so something like requiring legitimacy on a platform that people actually use, I think would provide a lot of value.
Yeah, it'd be super interesting to explore. All right, you got a magic wand. You can wave it one time and change one regulation or improve one regulation. What would it be?
I think the simplest one is the accredited investor rules. I think they're kind of stupid and outdated. If you think about it, when I was 22 years old, I took my Series 7. I became licensed by FINRA to sell securities to the public, but I wasn't an accredited investor, so I couldn't buy them.
It's pretty crazy.
It's got to change.
Yeah. What do you think the right framework would be?
I think it's a combination of either capital or some sort of education. You know, if you know what you're doing, you should be able to participate in, you know, a startup company that you believe in.
Yeah. I'm a big fan of that. I think the education one would be harder to implement, obviously, but I do think that it would be quite powerful, and actually you might get a more efficient, more safe market if you just have more people educated.
Totally agree.
Right. All right. So I end each podcast. I let the guests ask me one question. What one question would you like to ask? You're thinking so hard about this, it's scaring me.
I just have a few different ones. I'm just trying to pick between them.
We'll break the rules. You can ask two.
Yeah, I guess where do you see this going in 2 years?
2 years?
Yeah.
So I think a lot about the Bill Gates quote of, we overestimate 2 years, underestimate in 10. And on the digital security side, I completely agree. We're going to get to a global marketplace with, kind of compliance and law written into code. All the assets will be digitized, etc. I'm actually pretty bearish on how far we're going to get in 2 years. As we've just looked at it more and more, I think part of the problem is the user experience of the key, or the core components isn't there yet. So one of the easy examples there is just when I want to send you Bitcoin, it's actually pretty hard, right? And the running joke is everyone's scared when they send it that it may disappear, right? Because I've got to make sure I get your address perfectly right, and just that user experience sucks, right? And so we're all the wackos that are using this stuff early, and it's fun and it's cool, and we think we're really smart, but there's no way that mass adoption's happening when I've got to send, Bitcoin to this random string of letters and numbers, right? And so that's a really clear example of we got to fix that problem before mass adoption happens. And so if we got to do simple stuff like that, the odds that we're going to get to buying and selling digital securities in 24 months on a global basis with code written into law and full harmony of jurisdictions and all that kind of stuff, I think there will be, examples or kind of early assets that accomplish that. We're not going to have a highly liquid marketplace, in my opinion, right? So I think that, that's one thing. Now, I don't think that it takes 10 years, right? So it's actually somewhere in between there. And so if you looked at it and said, take, I don't know, $70 trillion of assets, right, that are kind of tradable, I think, in the U.S. And maybe I have that number wrong, I'm not sure. But if that's true, 50% of the assets are tokenized or digitized, right, in the next 10 years, I could see that, right? And just kind of coexistence and there's kind of this slow disruption of the existing system. That wouldn't surprise me.
Yeah, I actually totally agree with that. I think securities going through any sort of kind of inflection point, I think is probably at least 2 years away. One of the things I like to think about and that I'm hopeful of is that someone like Apple comes out with a hardware wallet solution that's basically integrated into your device, so everyone in the world basically can sign and send transactions.
There's 3 companies that it would be powerful for. It'd be an Apple, a Facebook, and maybe one an Amazon, a massive retailer, right? Like one of those three companies, a hardware provider, some sort of like social network identity provider, right, and a retailer. If one of them did it, I actually think it would force the hand of everybody else, right? Because they don't want, I don't know if Facebook would want all of their users using Amazon's wallet, right? So now all of a sudden you push the pace of innovation across the spectrum, and everyone has to create one. And then somebody will come around and they'll bundle them all together and say, hey, here's one wallet that interfaces or is interoperable with all these other wallets, and we'll kind of enter this whole cycle. But I think that first one's really important.
Yeah, and I think Facebook's interesting because they have a blockchain team.
Mm-hmm.
From what I heard, they're struggling to find talent because a lot of the young blockchain developers, maybe the ethos is a little bit at odds with Facebook, and also I think a lot of the young talented people won't necessarily join Facebook at this point. So I think Facebook probably will go on an acquisition spree at some point to get into blockchain in a serious way.
Yeah, I mean, I don't know for sure about the engineer talent, right? Like that wouldn't surprise me. I mean, that's a narrative that generally makes sense. The one thing that's interesting to me about Facebook is they've got some of their top talent leading the team, right? So they went and David Marcus, Kevin Wheel, etc. Morgan Beller. They really have been thoughtful about if we're gonna put resources here, let's make sure we put some of our best people. And so I'm interested to see what they come out with, but whatever they launch, they'll immediately be the largest crypto company. Right? They got 2 billion users, and so if all of a sudden they gave everyone a digital wallet, right, or something like that, they just have more users. And so I think that that's a pretty interesting world of possibilities. And so I'm cheering for them to do something that kind of positively impacts the world and drastically increases the adoption of crypto.
Me too.
Absolutely. All right, man. This has been super fun. Thank you so much for coming. We'll have to do this again.
Thank you. I love that.